Hey everyone, Ryan here with Stock Investing and Trading 101. Today I'm doing another portfolio update for my Stash Invest Dividend Growth portfolio. It's currently valued at about $9,200. I've been a lot of changes to it. So what I'm going to do is briefly scroll through and tell you guys the positions. And then after that, I'm going to go through some of my bigger positions and explain kind of my logic or how it got to be this position in my portfolio. So let's just go through the holdings first. Currently, my biggest holding is Target, followed by GM and Walmart. After that, we have Tyson's Foods, General Mills, AbbVie, Starbucks, Restaurant Brands, ExxonMobil, McDonald's, Chevron, Walgreens Boot Alliance, and 3M, along with Boeing. So these are kind of the biggest holdings, I suppose, all above $200 invested. After that, we have Altria, Caterpillar, Home Depot, Disney, Merck, Royal Dutch Shell, Microsoft, Apple, Pepsi, Costco, Schlumberger. We have InBev, Clorox, and Duke Energy. These are kind of the medium positions, $100 to $200 invested. And then after that, we have Simon Property Group, Johnson & Johnson, Visa, Global Stability, which is just a big ETF worldwide, Intel, Kraft Heinz, Pfizer, IBM. We have ICE ticker, MasterCard, EOG Resources, Waste Management, AT&T. We have Coors, Lockheed Martin, and then the rest here, I will just briefly scroll through because these are negligible positions. They're, pretty small amounts. They don't need to all be mentioned. But now what I'm going to be doing is going through and explaining my basis on some of these investments. So looking at Target and Walmart, these are kind of similar retail type of stocks, and they've both had pretty rough start to 2020. Looking at Target, it's down about 9% in the past, 1 month or so since 2020 began, and it was coming off of all-time highs. So it's been a very strong stock along with Walmart for 2019, and so I'm just buying the pullback. So that's the case with Target and Walmart. With General Motors, this has probably been one of my poor decisions with investing. It was kind of a speculation play of mine, and I bought it before earnings. It was already down quite a bit, but it went down even more after their earnings. So it's something I'm holding. It's actually right now, it's at like a 5 PE ratio. This thing is really dirt cheap. And it's still got a healthy dividend of over almost 4.5%. So I am gonna hold it and collect the dividend, and hopefully it can make a bounce. It's like I said, it's very low right now, cost-wise. So I think it's got more upside potential than downside potential. However, it hasn't worked out for me as of now. After that, we have Tyson Foods, which I've actually bought all of my position within the last week. It's down 11% year to date. This is also a similar situation with Walmart and Target, where it's a very strong stock. It performed very well for 2019. It's already lost 11% of its value almost in the past, 39 days since 2020 began. So I'm buying the pullback, and I'm actually buying it somewhat heavily. I think as of right now, I might buy a little bit more, but this is probably the bulk of my position, possibly, 10 or 20% more or less. After that, we have General Motors and AbbVie, or General Mills. So General Mills, I've always been holding a position in, and I've actually been buying more. It's making this is not a very volatile stock, so it doesn't have major big up or down swings, and that's one of the reasons that it's a core position is that, it's relatively stable, yielding almost 4%, and it's just kind of like a safe foundation is how I think of it. But on top of that, it has had some pullback opportunities. Right now, it's pretty much flat for 2020. So there's been very small pullbacks, and I've just been kind of picking up more shares here and there during these little pullbacks. And with AbbVie, it's actually came down quite a bit. I was buying it when it was pulling back earlier, less than a month ago. It had a pretty nice pullback. I bought most of my position then. And since then it's gone up and up even after their earnings, which was on Friday. It was up almost 6% on Friday. So currently I'm getting like 10 to 13% return from this company. I sold some of the position, but I'm actually going to be holding. I really like AbbVie as a long-term hold, and not to mention it's yielding like 6%. So this is kind of a win-win in my opinion. We also have Starbucks, which is similar to the McDonald's type of thing, but they also have added volatility with having to close some of their China stores because of this virus going around. So it had some negativity around it. It's down 3% year to date, and it's something I'm just kind of buying the dip. It had a pretty decent dip, and I think it's a good buying opportunity if you aren't already in this name and you are looking to get in this name. After that, we have Restaurant Brands, which is an international company. They have tons of names under their brand here. We have Burger King, Tim Hortons, Popeyes. It hasn't been performing very well as of lately. They have earnings coming up next week. I'm not really expecting anything big to come from them. In fact, their last couple of earnings haven't been very good at all. I'm holding my position, but I'm not currently buying any more of Restaurant Brands. I just don't know where this one's going to go, and it's just a little bit too risky for me right now. Next, we have ExxonMobil. So this is going to link kind of all the oil companies in my portfolio. We have Exxon, Chevron, and I also have Royal Dutch Shell. So these, obviously, the oil companies have not been performing very well in actually a number of years. So we're down 13% in the last just over 1 month of 2020. And that's not to mention that 2019 wasn't really any better. However, it is currently yielding over 5%. It's not something that I'm buying more of. If anything, I might be buying a little bit of Chevron. But speaking strictly about ExxonMobil, I'm actually looking to get rid of this position when I have an opportunity. Hopefully, I can get it back to break even, where if I sold it, I wouldn't be losing any money. But until then, I'm just going to hold it. It still collects that dividend. And hopefully the dividend can just break me back to even. Otherwise, if the cost of oil, because oil is pretty much at lows, multi-year lows for the cost per barrel. So if crude oil went up in value, it would most likely bring all of these oil stocks up along with it. So that might be another possible outcome. After that, we have McDonald's. So not much to say about McDonald's. It was one of my biggest holdings. It's had a pretty strong start to the year so far. I've sold about half of my position, and I'm going to be holding the rest. There's been a lot of news with McDonald's CEOs and things like that. But currently, it's pretty much right back at all-time highs, and I definitely want to be holding some McDonald's. So moving forward, we have Walgreens Boot Alliance, 3M, and Boeing, which are some of the Dow stocks. 3M and Walgreens, and really 3M specifically, has had a really rough 2019, and so far 2020 has been pretty rough for them as well. I've been buying the dip, but I think this one, I don't really have high hopes of it making like a huge comeback, but at the same time, it is pretty beaten down right now. Walgreens Boot Alliance, I'm actually looking to get rid of when it breaks back into profit, if it does. Right now, I'm still collecting the 3% yield, but if anything, I would move the money from Walgreens into CVS, but I'm most likely just going to keep both of those out of my portfolio and move it into a stronger sector or a stronger stock. Next, we have Altria, which I think is actually a really good buy right now. It's got over a 7% yield right now. It's a dividend growth stock that's had its dividend growing for a number of years. It is in I guess, a declining sector. I think the number of smokers, people smoking cigarettes, is going down. But the thing about these companies and the thing with Altria is the way that it combats the decline in smokers is by raising cigarette prices. So if 10% of the smoking population stops in 2020, they can increase the pack of cigarettes cost by 10% and make huge profit margins on it, and it will kind of negate the effects of the less smokers. So, but it did have its earnings, which was rough. Its Juul investment has just been going down and down. It's lost them a lot of money. It's down 6% year to date, and like I said, it's yielding over 7% currently. Next, we have Caterpillar. So Caterpillar down 10% year to date off of its highs. It's got a lot of China volatility in the stock. I've been buying it here and there. I'm actually probably going to be buying some more of it. I want to have this as a somewhat key position in my portfolio. I'm just going to wait and see if it's going to come down anymore. It's currently pretty much 11% off of highs, which isn't bad, and I think it's actually a decent buying opportunity. But right now I'm just kind of holding what I have and waiting and seeing. So next we have Home Depot, which I've cut a lot of my position in. I'm currently holding about $200 invested, return of 11%. We also have Disney, which it had kind of I guess, a mixed earnings, and the stock ended up going down the day after earnings, and I finally broke from being negative on my investment to being positive. I ended up cutting some of the position, just because for a number of reasons. First of all, the earnings wasn't that good, but it's only yielding about 1%, and I think this does have very good long-term potential of increasing their dividends and growing as a stock. But right now I don't want to, it was almost my number one position before, so I kind of reduced my risk and exposure with that investment. Next we have Merck, which is actually a decent, something I've been watching, something that I've been buying, down 8% year to date. It's a pharmaceutical company yielding about 3%. Um, and yeah, it's been a strong stock for 2019, making more and more all-time highs, and it's pulled back, about 8%. It might have more room to come down, but regardless, I'm willing to start building my position here. If it goes up, that's great, and if it goes down, I'm ready to add more if it goes down significantly. Then we have the tech companies, which is something that I don't have much exposure in, and that I'm actually planning on making some of my biggest holdings, probably number one and number two in my portfolio. They're currently at all-time highs and have been making new highs almost every single day, and that's the reason I'm not currently buying right now. However, I do definitely want to own them, so I'm kind of just waiting for a pullback, and so far there hasn't really been many pullbacks. But definitely waiting with some cash on the sidelines, ready to buy these companies up, because this is really some of the companies that are causing this whole market rally, especially Apple specifically. This is the number one weighted stock in all of the major averages, such as the S&P 500, NASDAQ, and the Dow. This is pretty much the stock that's leading this market. So next we're going to just briefly go through these smaller positions. I'm just going to kind of pick and choose some ones that are worth talking about. We have PepsiCo at all-time highs, along with Costco. I've been buying some of these beverage companies, so I've been buying InBev, and I've also been buying another company, Coors. So I've been kind of buying into those negligibly. But then we also have Simon Property Group, which I bought recently. They've had a small pullback. We have IBM, which has actually started rocket shipping upwards, making new all-time highs. They got rid of their old CEO, getting a new CEO, and they also had earnings within the past month. So both of these factors are causing the stock to gain 15% in the past month or so. So this has been a good performer for me. I've ended up selling majority of my position in IBM just to take profits, because it has been going up, just straight up for quite a while now. And other than that, a lot of the same holdings down here for my smaller positions. But yeah, that's the video, guys. I have made a lot of changes to my portfolio, and I do have plans to change it even more. Like I said, I want tech as some of my biggest holdings up here. I kind of want to cut this GM position eventually, and possibly some of these oil companies. But yeah, that's currently how my position is lined up. And I also have a retirement portfolio, which is very similar, and I'm not going to go through it with you guys. But I also really like Tyson right here. That's something that I'm buying. It's probably the stock that I'm buying the most right now is Tyson. and they're also getting into the plant-based protein game, so that might be something good for their business. So that's the video, guys. As always, thanks for watching the video. If you haven't already, please like the video, subscribe to the channel, and stay tuned for my future content.